Nvidia reported its first quarter earnings after the bell on Wednesday, beating expectations on revenue, reporting blowout sales, and doubling down on its AI dominance. Now, on a year-over-year basis, Nvidia earnings rising 33%, sales jumping 69%. Nvidia's data center revenue, which includes AI chips and related parts, surged 73% on an annual basis to $39.1 billion. Nvidia continues to roll out its next generation AI chips, the Blackwell series, promising cheaper versions in 2025. Now, all of this even as Nvidia had to write down $4.5 billion in charges related to the Trump administration's ban on sales of its H20 chips to China. Let's talk more about Nvidia's first quarter earnings. And for that, we're joined by Carmi Levy, a technology analyst and journalist. Welcome to the program. Thanks for taking time to chat with us. I'm curious what your biggest takeaway is from Nvidia's first quarter earnings, and how significant is the 69% year-over-year jump in revenue?
I think if this were any other company, Sean, there would be dances in the streets, and I mean, any company would dream to have blowout results like this. However, this is Nvidia. This is the bellwether stock, not only for the AI industry, but for the tech industry in general. Where Nvidia goes, everyone else follows, and essentially the health of Nvidia telegraphs the health of the artificial intelligence industry, of the data centers that power this new technology revolution. And so if there's any weakness at all in Fortress Nvidia, then conceivably the industry will notice, and of course that will be reflected in share values. And so the risk here is not necessarily in what happened last quarter. Those numbers were phenomenal. It's what's coming in the next quarter, knowing full well that over the last few months, the political context within which Nvidia operates has shifted significantly because of policy decisions out of the US. And the question now becomes, will they be able to repeat what they performed in the last quarter? Are the conditions available to them so they can continue to ship product to their key markets, particularly China? And we know full well that one big risk factor, not being able to sell as many H20 chips as they would like, that is a potentially significant drag on their performance going forward.
Okay, you talked about the data centers, and I want to talk about its future in just a second. But let's talk about the data center revenue, up 73%. Now, what's driving that growth? And really, how central do you think that AI's infrastructure is to Nvidia's dominance?
This is an all AI story. We know that AI applications from pre-training to training to actually running the models as they're public facing demands massive amounts of compute power, significantly beyond what traditional data center architecture can provide. And as I won't use the word luck, but as luck would have it, Nvidia's technology has been particularly applicable to the AI revolution. Its chips, generation after generation, have been remarkably power efficient, remarkably capable of training those models, then and running them when they're deployed to billions of people around the world. And nobody does it better than Nvidia. They are the one to beat. So as long as the AI industry continues to grow by double-digit figures every quarter, which is what we're seeing now, Nvidia can basically ride that wave. There's a reason why Nvidia became the first tech company to top $3 trillion in valuation, because they've essentially been riding that growing swell of demand for AI-based infrastructure because they can produce it at scale and in ways that other companies only wish they could.
Okay, let's talk about how they're managing the fallout, though, from the $4.5 billion inventory charge tied to those export restrictions that you were talking about to China, and also tied to last year's fourth quarter earnings. But, I also have to think about, at the end of last year, everybody was talking about DeepSeek, how that was going to affect Nvidia, doing it cheaper and quicker. We're just not talking too much about that comparison now. Why?
We're not. I think certainly DeepSeek's announcement, when they sort of broke cover in January and everyone realized that they were doing what they were doing on significantly lower power hardware, I think was a shock to the system. It kind of turned the AI industry on its ear. All those assumptions that you needed the latest and greatest chips to do what DeepSeek did on essentially two-generation-old technology for a fraction of the price of a traditional model. So I think it shocked the industry, but I think once the snow globe kind of settled settled out, I think we realized that it wasn't as great a deal as they thought it was. There were some aspects of how DeepSeek was developed that certainly weren't reported in the initial headlines. And so I think Nvidia's position, which certainly felt threatened in January, over time in the clear light of day, that wasn't the case. And they continued to chug along just as they always have, obviously with slight adjustments for political context. But in terms of the DeepSeek threat, it is not the significant threat that it once was. It is simply highlighted that there's enough room at the fast-growing AI table for more players, and DeepSeek's growth will not come at the expense of Nvidia's growth as well.
Okay, let's talk more about this geopolitical pressure as well, because Nvidia remains bullish. So how is the company positioning its Blackwell AI systems for the next wave of AI development?
Well, I think it was instructive that in their earnings call, they spoke to their adoption. In other words, how many Blackwell chips and systems have they shipped? What data centers are they powering? What do those use cases look like? And they've made it very clear. In the year since the Blackwell architecture was first announced, they've done a really good job of executing on that promise, bringing it to market and pivoting from the previous generation Hopper technology, which of course they continue to develop and continue to derive profit and growth from. So the Blackwell story, I think, is the key driver in the last quarter of their growth and will continue to be outside of China. Obviously, they're not allowed to sell it within China, but their execution on that with barely a hiccup, I think, sends a message to the rest of the industry. You want to execute like this company because they are setting the bar very high.
We don't have a lot of time left, but real quickly, I'm curious how you think NVIDIA's partnerships in the Middle East, especially with the UAE, could help offset exposure to the Chinese market.
I mean, I think that's diversification is the answer to the risks that we've seen grow out of the Chinese market, the limitations in selling into it. There are no such limitations in the Middle East, and government after government in the Middle East has indicated that they see AI as key to powering their economies going forward as they seek to diversify their efforts beyond straight up energy. And so, NVIDIA is only too happy to provide the hardware to build that out, and they certainly have the resources necessary to build data center infrastructure at a scale that either approaches or in some cases even exceeds what we've already seen in China. So that's why the numbers in terms of exposure to Chinese sale limitations aren't as large as they otherwise could be. NVIDIA has already done a really good job working around those limitations, and the Middle East is key to that strategy.